Hey everyone, Couch Investor back to another video for today. So we have a pretty big earnings week ahead. Big tech companies are reporting, companies with regards to advertising, financials, payments, semiconductor, they're all reporting in this week. So even though if your company is not reporting yet, you already get some indication of how that industry is performing. In this video, I'm going to go over a couple of companies specifically. Of course, some of them I own. I'll try and cover as many as possible during the week. And then, of course, I'll go over some of the expectations from the market. So let's have a look at what's ahead of us. On Monday, we're starting the week off pretty relaxed, but then on Tuesday already before the market opens, we've got Coca-Cola, Verizon, General Electric, RTX, 3M, Spotify, NextEra Energy, and GM, different big players in important industries. Of course, with regards to Verizon, we already got the numbers from AT&T, were pretty good, especially when it comes to free cash flow. Maybe the expectations here are a bit of the same for Verizon. Then, after the market closes, big guys, Microsoft, Alphabet, of course, for them, it's about software, it's about the cloud, Alphabet, how is YouTube doing, how's the advertising market doing. We've got a smaller player here, Snap, which used to crash the market because of the bad business that they had. We have Visa. How's the payment market? Are people spending more, spending less? What's happening there? And then Teladoc with regards to the telehealth industry. I'll probably cover Teladoc and Microsoft and Alphabet on the same night. Then with regards to Wednesday, before the market opens, we've got Boeing, T-Mobile, Hilton. Those are the ones I'll be watching for their numbers. But then after the market closes, we've got Meta, of course, huge with regards to advertising, AI, social media, IBM, software, cloud, same with ServiceNow. And then Thursday, before the market opens, again, a couple of interesting industries here. Cruise line, Royal Caribbean, UPS, Hershey's. Let's see if people still buy their chocolates or if everybody's buying Mr. Beast Feastables. Altria, tobacco, dividend play, how's that industry doing? Is there a turnaround around the corner? Yes or no? Remains to be seen. And then Thursday, after the market closes, that's a big one. We've got Amazon, so e-commerce, advertising, AWS, which we already maybe got some answers when we go after Microsoft and Alphabet, but still Amazon, a pretty big player, pretty big deal. Then Enphase, even though we already had the numbers for SolarEdge, let's see how bad it is for Enphase. Then we had Intel, semiconductor player, of course, the first before AMD and Nvidia to report. It's going to be interesting if they can meet their own targets. And then Ford, after Tesla, after GM, how bad is their situation? How bad is the situation with regards to the UAW? Their outlook for next quarter, next year could be very interesting and a good indication of how the ICE industry is performing, even though we know how the car industry is performing right now. Not that great. So a pretty big week, lots of companies in different industries that will provide us with a lot of answers with regards to how the economy is doing, with regards to how the consumer is doing, and of course, with regards to how your portfolio is doing. So I'm going to go over a couple of companies in this video, but throughout the week, I'll try and cover as many as possible. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're on our way to reach 30,000 subscribers. So thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So company number one I want to talk about is Google Alphabet. The stock is up 53 to 54% year to date. Forward PE just under 22 times. So what are the expectations for this quarter? With regards to sales, year-over-year growth of just under 10%. With regards to EPS, much better there, 36% growth year over year, quarter over quarter, basically flat-ish. Now, if we look at valuations, PE, EV to EBITDA, price to sales, price to free cash flow, despite this being probably one of the best performing mega cap companies of the year, with regards to its 5-year mean, it's pretty much cheaper on all metrics besides the price to sales, which can change, of course, after the report, maybe better than expected earnings. But then again, if that's the case, the stock will react accordingly as well. But this is the picture right now with regards to the stock. And of course, this is something I've been saying for a while now when talking about Google. You're not only going to get the positive effects of AI, of the cloud, of a boom in advertising when the market turns, you're definitely getting the positive effects of them buying back more shares more aggressively. And I mean, this has happened in the last 10 years. You can clearly see that in the past 3 to 4 years, they have been buying lots and lots of their own shares. Free cash flow has gone up accordingly. And then the 5-year EPS forward estimations, growth there of 17.47%, not too shabby. Now, with regards to the numbers that I'll be looking for, of course, how is YouTube performing? We know that last quarter it has done a bit better, but how is that doing? The advertising market as a whole. And then Google Cloud. I'm not going to look at revenue because I know that's probably increasing. I would like to see another good quarter of positive operating income with regards to Google Cloud. I've said this already a couple of quarters ago. I think this is going to be a huge surprise for the market and something that will keep on pushing this stock forward. Then stock number 2 is Microsoft. Of course, Microsoft have been doing quite well this year as well. It's up 37% year to date. I'm starting with the last graph we've seen for Alphabet. So here as well, I mean, the magic of buybacks in full display here for the last 10 years, of course. More recently, unlike with Alphabet, they have been buying a bit less than they did at the start of that decade. Free cash flow has increased accordingly. EPS for the forward 5 years, estimates are there now at 13% growth. Now, with regards to valuations here, we can see that on all metrics, it is more expensive than its 5-year mean. Some might say, yes, but the effects of AI, Copilot, all the new subscription, the growth in cloud, etc., is not priced in just yet. Or maybe it is priced in, so it justifies that it's higher than its mean because it wasn't priced in before. Okay. Fair enough, I just wanted to show you that currently the stock are more expensive than its 5-year mean. Then with regards to the expectations from the market right now, so sales growth year over year of 8.8%, quarter over quarter a small decrease of 3%. But when it comes to EPS, the market is expecting 12.74% growth year over year and a decline of 1.5% quarter over quarter. Now, of course, with regards to Microsoft, the company has been doing quite well on all fronts, revenue, net income especially. But when it comes to revenue from Intelligent Cloud, last quarter that was $24 billion, increased 15% year over year or 17% on a constant currency basis. And here is where the majority of that growth is coming from. So server products and cloud services revenue increased 17%, driven by Azure and other cloud services revenue growth of 26%. So can they continue that momentum? Of course, with everything else, Dynamics, Office 365, how is that performing, especially now with the addition of Copilot, AI applications? Is that driving in more and more software sales? Remains to be seen. Up next, the company that is reporting after the market closes on Wednesday, that's Meta. What are we looking for with regards to Meta? So, expectations here, sales growth 20.6% year over year, an increase also of 4.46% quarter over quarter. With regards to EPS, I mean, huge increase because last year was a complete disaster. So EPS 119% growth year over year and close to 21% growth quarter over quarter. So again, the turnaround story for Meta is still going on. And here, despite the stock being up 156% year to date, you can still see that compared to its 5-year mean, the stock right now is still trading at a cheaper valuation. Of course, the last 5 years, a lot of things have changed. We had COVID, we had that huge run up, but then we had that down cycle as well. So take all of that into consideration. And here with regards to the share buybacks, yes, they started to aggressively buy back their shares back in 2021. Unfortunately, they should not have done that because, well, the stock has gone up incredibly and then has crashed. Since then, yet it has been buying back shares, but since the business has not been performing that well, they were not really in a luxury position where they could just buy billions and billions worth of their own shares. That's a sad thing to say, but hey, that's the reality. Now, with regards to EPS estimates, 5-year growth rate here, 22%. And so with regards to Meta, what are we looking for? Of course, we want to see users grow. And even if it doesn't grow that much, I mean, there are over 3 billion users already on Facebook. Just the daily active ones is 2 billion, which is already crazy. Monthly active people for the family ones, 3.88 billion. I mean, Last quarter, we saw them increase 6, 5, 7%, which is insane, especially with those numbers. So let's wait and see what happens there. As long as it's not a big decrease, I think the market will be okay. Then all eyes on ad impressions and price per ad. Last quarter, it was pretty good. Family of apps increased by 34% year over year, and the average price per ad decreased by 16% year over year. Let's see if we have a small improvement quarter over quarter. And then, of course, if the business continues to perform much better than before because of all the changes that they've been doing in the recent quarters, the net cash provided by operating activities should continue to increase. So free cash flow should continue to increase as well, which means that in the future, they'll have that luxury to buy back a lot of shares if their shares crash or if they feel that their shares are just too cheap. Then moving on to Intel, I've talked about Intel not so long ago, so I'm not going to repeat everything over and over again. But here, a major overview. Yes, in the past, they've been buying back a lot of shares when they should have invested way more in the business. Hey, that's how they've reached their lowest points, in the last 2 years or so, which is why the stock crashed a lot. But hey, year to date, it's been performing quite okay. It's up 34.76%. But free cash flow has turned negative for the first time in a long, long time, I think maybe even ever. Now, the EPS estimates for the 5-year growth rates have now increased back to close to 4%. Not incredible like the other companies that we've seen, but hey, we'll see some improvements. Then with regards to valuation, you've seen this not so long ago. Yes, it is expensive because the stock has run up faster than how the business has been performing. But if we keep on getting those better than expected quarters, expect this to change a bit. And now what is the market expecting? Well, sales year over year to decrease 11.5%, quarter over quarter to actually increase 4.8%. Then with regards to EPS, we can see that the market is still expecting a huge decrease here year over year, 63.29%, but quarter over quarter an increase of 66.59%. Which is a bit worse than their own outlook. So they expect EPS to be 20 cents, which is down 46% year over year. Gross margin 43%, down 2.9 percentage points year over year. And then revenue down 13% to come in between $12.9 to $13.9 billion. We already got some comments that probably is going to come in closer to $13.9 billion. And hey, if they can keep on increasing that quarter over quarter, we could be right back on track. But of course, with Intel, I don't want to get ahead of myself. Yes, the performance this year has been, in my opinion, better than what was feared, but they still have a lot to show to investors and to the markets as well, not just from a consumer's perspective, but from the data center, from those enterprises as well. We're still waiting for that big whale client for Foundry. Maybe we'll get some answers towards the end of this year. Remains to be seen. Then last company I want to touch on in this video is obviously Amazon, a company that will also give us a lot of answers with regards to e-commerce, advertising, and AWS, the cloud industry. So the expectations here for sales are an increase of 11.4% year over year and 5.36% quarter over quarter. With regards to EPS, huge increase there, 112.18%, but a decrease of 8.6% quarter over quarter. Now, with regards to how cheap, how expensive the stock is today compared to its 5-year mean, still after a 49% performance this year, it's still cheaper than the 5-year mean when it comes to PE, EV to EBITDA, price to sales. The only one that is way more expensive is price to free cash flow. But as we've seen in the last quarter, free cash flow, operating cash flow is becoming much, much better for this company. So expect to probably see this decline quite fast. And then yes, with Amazon, they did not buy any shares. They did not have the money to buy back shares. Well, it's not that they did not have the money, they just didn't choose to buy back shares with the free cash flow. They instead invested way more in the business. But if you looked at operating cash flow, that has been increasing much faster than free cash flow. But still, we're going to see here a huge improvement in the next 5 years. The EPS estimate for the 5-year growth rate sits at close to 40% now. And so what are we looking at here? Well, online stores probably not going to change that much. Third-party sellers should keep outperforming. Subscription services doing what it does best. But then advertising and AWS advertising, I think, will still perform incredibly well. I mean, it's been doing very, very well considering the market that we were in. AWS, maybe to see some improvements there, growth coming back, operating income for AWS being a bit more stable. I think that should give the market a lot of confidence with regards to Amazon. Last thing here, this is what I meant before. So free cash flow, they give us trailing 12 months here. You can see huge improvement there. Again, this is trailing 12 months. I don't know why they can't really put it into quarters here in that slide, but a huge improvement there. But if you looked at operating cash flow already since Q2 2022, you can see that it has been improving quarter after quarter. So it was just a matter of when, not if, free cash flow will start to reflect that. So pretty exciting week ahead of us. Of course, do share your expectations for all the companies that you hold, the companies that I covered in this video. Do you think they'll beat? Think they'll miss? What do you think the market's reaction will be? Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.